morning, everyone. Thank you for taking the time to join us this morning on this pre-close presentation, updating you on Spear's 2021 half year. During today's presentation, I'll be sharing with you how Spear has navigated through these very difficult times. It's been 105 days since our last presentation to the market and 154 days in varied levels of lockdown. We welcome President Cyril Ramaphosa's decision to move to lockdown level 2 as South Africans and our already fragile economy suffers under the consequences of this government-imposed lockdown. The bulk of economic activity can now recommence. It goes without saying that the past 6 months has served up some of the toughest trading conditions locally and abroad, in particular to real estate owning businesses. Just what I'm going to be talking about over the next hour on the following slides. Just a reminder to please email any questions to info@spearprop.co.za. Myself and our CFO, Christian Barnard, will be taking your questions and answering them after the presentation. The 6 months to the end of August 2020 has been synonymous with rent relief, cash flow relief, rental credits, rental deferments, payment plans, liquidations, and business rescue, as the South African economy has grounded to a halt due to various levels of lockdown being implemented by our national government. Despite all of the latter, our hands-on approach to asset management has assisted Spear to navigate through these tumultuous times, with rays of hope starting to emerge through the fog. We stand in solidarity and support with all South Africans, our tenants, and their respective businesses as we emerge from this national state of disaster. Our thoughts and our prayers are with those that have lost their lives and livelihoods as a result of this pandemic. Spear is a values-driven and purpose-driven business that still has many significant milestones to achieve, and I would like to, on behalf of the whole team at Spear, thank our shareholders and investors for their support during this time. The presentation today is as much about our people as it is about our real estate portfolio. Quite frankly, if we had not moved through this time as a team, unified under one purpose, the outcomes of the presentation to follow would have been very different. Thank you to all our staff for their sacrifices and commitments during this very, very difficult time. On behalf of the executive team, I would also like to acknowledge our chairman, Mr. Abu Varachia, and our board of directors for their ongoing assistance, guidance, support, and the financial sacrifices they made during this time. Just giving an environmental update, at the onset of the COVID-19 pandemic, the Western Cape quickly became the province with the highest infection rate in South Africa. The Western Cape provincial government, under the stellar leadership of Premier Alan Winde, initiated a human and healthcare response unseen across the rest of South Africa. I believe the proactive and untainted process has been one of the main reasons why the Western Cape has started to see the decline of daily infections and COVID-19 active cases. We must give honour where honour is due, and I would like to honour the many frontline and healthcare workers, national and provincial government officials that gave of their time and their skills to prepare the Western Cape's COVID-19 response. Within the Western Cape, one of the hardest hit sectors has been the tourism, hospitality and services sector, as businesses and individuals have been unable to generate revenue and income during these times. In Spear's case, our 2 hotels, Doubletree by Hilton and 15 and Orange, have been unable to trade fully until recently under level 3 regulations. I must note that the Doubletree by Hilton has been trading since the 1st of June 2020, but prior to that, as a management team, we did not rest on our laurels. During the month of May 2020, the Doubletree by Hilton, through a strategic relationship with one of our office portfolio tenants, provided cruise ship repatriation services to generate roughly 2.5 million rands worth of revenue towards covering operating costs on site. I would also like to extend a specific word of thanks to our National Minister of Public Works, Honourable Patricia de Lille, Mr. Kobus van Rensburg from the Presidential Infrastructure Coordination Commission at the IDC, with the Western Cape Provincial Health Department, Westgrow, and the Port Health Authority for their guidance in establishing our repatriation services during the month of May. The lack of economic and trading activity due to COVID-19 and the related lockdowns will leave in its wake numerous casualties directly impacting the general real estate sector. In the short, medium and long term, it's up to us all, as South Africans and as business people, to take up our mantle and start generating jobs. Over the last 6 months, there have been very few good days amidst a barrage of many, many bad days, not only for Spear, but for South Africa as a whole. However, the South African Reserve Bank had introduced some consumer relief with a 275 basis point cut in the prime lending rate. As a management team, we were fortunate to only have the Greater Cape Town to focus 100% of our energy and attention on, to speedily finalise various forms of relief to roughly 46% of our 420 tenants. During the interim period, the lion's share of the portfolio has remained resilient during these incredibly challenging times. But we have had certain tenants in the travel, tourism, restaurant and entertainment sectors that have unfortunately not survived and will add marginally to the vacancy rate within the Spear. I am, however, extremely pleased to advise that the tenant retention percentages remain within the 90 percentile range. A reminder of our mission statement. Over the years, Spear has continued to attract astute shareholders and investors as a result of our authentic and straightforward real estate-focused business that places income generation and income growth at the forefront of its distribution-paying business plan, underpinned by a high-quality Western Cape portfolio. Our mission statement is to be the leading Western Cape-focused REIT and to consistently grow our distribution per share ahead of inflation within the top quartile of our peer group. Just a recap on our strategy, which has remained firmly in place. During the interim period, we have maintained and achieved our short-term strategic objectives set out to the market in May 2020. We have adapted as best possible to a COVID-19 operating environment. We have preserved capital and continued to manage liquidity. We have maintained a high level of income statement consistency with strong rental collections on a year-to-date basis. We have continued letting space during varied levels of lockdown with quick turnaround times. We have maintained a high tenant retention rate as well as our landlord of choice status within the province. We have reduced controllable expenses through group-wide cost cutting, payroll reductions and fee reductions across the board. We continue to dispose of non-core assets. 1 asset which is already transferred, 2 which are currently under due diligence, and a final 1 which is currently under negotiation. Talking to our medium to long-term strategy, as we move beyond the initial impact of COVID-19, it's important that we maintain our aspirations to becoming a meaningful mid-sized REIT with assets under ownership of roughly 15 billion rand within the Western Cape. Make no mistake, there's no race to get to 15 billion. We will do so conservatively and with a value investment approach. Spear will remain a regionally focused REIT that annually endeavours to reward its shareholders with a mission statement aligned return on your investment. Alignment of short, medium and long-term strategy is very important to us as it talks to the founding values of consistency and transparency in our business. Within the medium to long term, we will continue our focus to narrow our asset ownership to commercial, convenience retail and industrial investments with a clear focus on fixed income as opposed to variable income investments. We will weave a renewable energy strategy into the fabric of our business and our investment approach. We will grow our distributions ahead of inflation annually. We will prudently recycle capital, which we have a proven track record of. We will reduce our gearing ratio in line with our strategy. We will maintain a conservative debt hedging profile, and we will maintain high portfolio occupancy levels. Talking now to the impact of COVID-19 on Spear. As mentioned, consistency being one of the core values of our business, which our asset management team has exemplified during these very difficult times. The impact of the pandemic has been felt in probably every corner of the globe. Spear, as a Western Cape investor only, has continued to carefully navigate through this very fluid and tough trading environment. As a management team, our primary focus has been rent preservation, tenant retention, tenant support, debtors management, and vacancy management. Daily and active asset management takes place across our business to ensure business and revenue continuity. During May 2020, we shared with you this very slide showing the lockdown operating percentages revenue based on rentable area. These scenarios are effectively what percentage of our tenants could operate lawfully within their premises during the various levels of lockdown. Over the last few months, government has permitted more economic activity to return than initially allowed under the various lockdown levels. This slide would illustrate how the amended regulations has had a positive impact on Spear and its tenants. As you will note that under level 3 and level 2, initially, the percentages of tenants that could operate from their premises was significantly lower than what it is now. I furthermore wish to recap on the operating scenarios that we shared with the market in May 2020, so that I can better contextualize it within this presentation today. We established operating scenarios setting out Spear's income position through various collection percentages and what demands it may place on the business. Our low road scenario was we collect 60% of our budgeted revenue, which would effectively bring us to a break-even point. Our mid-road scenario set out that we would collect between 61 and 71% of total budgeted rental, which would move Spear towards profit and accumulation of cash reserves. Then we had our high road scenario. 85% of total budget collected, which would make Spear profitable and on track to stabilized income generation. So where are we today and looking forward? The balance sheet and income statement remain robust and meeting all covenants. Liquidity availability has remained sufficient to absorb various rental credits, deferrals, and in addition to covering all operating expenditure and interests. There remains a zero going concern risk within this business. 180 million rand of cash availability remains in place post capital deployment of portfolio improvement projects during the interim period. Zero funders assistance measures have been initiated during the interim period and none into the foreseeable future, as the current mid to high road operating scenario remains the status quo. Spear's funders remain aligned and in support of Spear's strategy, and Spear remains sufficiently capitalized to meet all its short and long-term commitments. Sharing with you a portfolio update. Spear owns 32 high-quality Western Cape assets. The portfolio value, 4.5 billion rand. We have a portfolio GLA of 453,319 square meters with an occupancy rate of 91.4%, a weighted average lease expiry profile of 28 months, with an average rental of 91.10 rand per square meter, and a in-force escalation across a portfolio of 7.23%. Now on to probably the hottest topic of this presentation would be our collections. The trading environment remains extremely challenging. Spear's hands-on approach and regional focus is paying off. Our year-to-date collections under the circumstances have been satisfactory and in line with management's planning scenarios. Our billings reflects revenue after all credits and deferments, including recoveries. Our original budget, for the avoidance of doubt, reflects pre-COVID operating revenue, including hotels and recoveries, which were set in December 2019. We have provided zero hospitality income in our billings recovered. Tenant arrears as at the 26th of August 2020 equated to 16.1 million rand and are reducing on a weekly basis. These below amounts exclude VAT. As you will note, on the original budget and the billings, we have allocated the revenue line items as well as the percentages collected. You will note that our collections versus what we've billed in March was 98.95%, in April 97.83%, in May 97.65%, in June 95.28%, in July 90.12%, And in August, month to date, we are currently at 81.43%. But I must take my hat off for our entire team, because we are standing at a year-to-date collections versus what we've billed of 93.25%. It is also worth noting that in August, we do have utility recoveries that have been billed that are to be paid and settled at month end, which would have a further beneficial impact on the recovery percentages for that period and would in turn push up our year-to-date recoveries to about 94% for the interim period. Just following on with our collections, it's important to note what have been the exclusions, credits and deferrals, which exclude utilities provided during the interim period. As a direct result of COVID-19 pandemic, management has restructured and or renegotiated 196 lease agreements during the interim period. A notable slowdown has been seen in tenant relief requests, as the majority of tenants are permitted to return back to work and for economic activity to recommence. During the interim period, as we've noted in previous presentations, we have not provided any income for hospitality, for the hospitality sector. Thus, you will see that compared to our initial budget, you will see a negative amount showing up in the slide. On hospitality, it's a negative 12.3 million. Per May 2020 results presentation, zero income has been forecasted for hospitality. We provided credits of 10.3 million rand. Internal assumptions are that this number will not increase significantly over the balance of 2021. We have deferred rental to the value of 5.1 million rand. However, I must note that within that 5.1, we have already recovered 1.3 million rand in the month of August. And we have stopped billing 1.1 million rands worth of rentals. These are typically the likes of gyms and associated businesses that simply cannot reopen under level 2, which is a very small percentage. We do anticipate that until such time as we move to lockdown level 1, that this number may, as a worst case scenario, end off the year at around 2.4 million rand. Just moving on to tenant letting activity. During the period for FY 2021, we have 130,000 square meters of space that will come up for renewal, with a total of 93,160 square meters already having been finalized. The latter is an impressive 72% completion rate at the time of this presentation. We expect to, within the next 2 weeks, to be closer to an 82% completion rate on the renewals for the FY 2021. We currently also have roughly 30,000 square meters of space under negotiation for renewal and extension by 2 of our blue chip tenants within our industrial portfolio. You will also note that we have had a significant positive rental reversion within our commercial portfolio, as this is a result of number 1 Waterhouse being let at 30% above its rental guarantee, which expired in June 2020. I must take my hat off to our leasing manager, Mr. James Barlos, for this fantastic achievement. We are still doing office deals in the current environment and concluded a 400 square meter lease on Wednesday at number 1 Waterhouse. On a percentage basis, we've had a negative rental reversion of 21% within our retail portfolio. The reversions were in line with management's expectations. We would, under the circumstances, rather absorb some level of negative reversion rather than a vacancy. So moving on to our non-core disposals. In line with our less is more approach, our CIO, Kim Fafkarg, has been mandated to dispose of identified non-core assets below 100 million in individual value that no longer fit the portfolio composition and are positioned to trade. All of the proceeds from these disposals will be allocated to reducing our debt, and we anticipate the net proceeds to be 148.8 million rand. You will see that our 10 Mill Street property has already transferred, and we have 3 other assets that are either under negotiation or under due diligence for a further 93 million rand. Just moving on to our sectoral performance. Sector-wide, the impact of COVID-19 has been felt in varying degrees. The resilience of the Spear portfolio has been displayed in the level of collection set out earlier in the presentation, along with the following sectoral performance updates. In terms of our retail portfolio, we have a 42,000 square meter GLA retail portfolio. Spear has only ever invested into convenience retail assets as opposed to larger regional or super regional centres. This has been a very beneficial strategy, especially in these tough times. Our retail portfolio occupancy is at 91%. Our collections have been 87.86% versus revenue billed for the period. Spear has provided credits and deferments to retail tenants to the following values: 4 million rand in credits and R500,000 in deferments. May to August 2020, credits and deferments have reduced significantly due to tenants reopening under level 4 onwards. During all levels of lockdown, our retail assets have performed in line with management's expectations. All anchor tenants have been able to operate under level 5 lockdown. Letting activity has been in line with expectation, with the bulk of renewals being concluded per management's budgets for the period. No significant retail tenant failures have occurred during the interim period. However, Spear has elected not to raise rental on gyms, of which we have 2 within the portfolio. 764 square meters could be considered a COVID-19 related casualty created in the interim period. I would like to also state that Spear has no exposure to Edcon or Massmart. We further do believe that open-air shopping centres, of which we own 2, would probably trade better over the next 12 months, given the fact that the residual effects of the pandemic would take time to work through the system, and shoppers may be reluctant to be in closed-up shopping centres. So where do we see the risks? There's lower level of income risk as close to 100% of our tenants are trading and are able to pay their rent. We do believe that gyms will take longer to recover to pre-lockdown levels and may require longer-term lease restructuring or deferments. We do believe that as South Africa navigates through a recessionary environment, that a drop in consumer spending may impact the convenience retail sector and our tenants' ability to pay their rent. In our commercial portfolio, I may be accused of being biased, but this pandemic will not give rise to the demise of the office sector. No one wants to journey through their career solely via a screen within the spare room of their home. An office is more than just a business address. It's a place of collaboration, shared experience, empowerment, skills transfer and development. Working from home is not a one-size-fits-all solution. Therefore, office space in good areas will remain relevant, but landlords will have to rethink the overall experience of coming into the office and how that can be made more attractive. All Spear's commercial assets are located in highly attractive and established office nodes within Cape Town. Our office portfolio occupancy is at 92%. Our collections have been 95.66% versus revenue billed for the period. Spear has provided credits and deferments to office tenants to the following value: 3.5 million in credits and 2.9 million in deferments. Again, similar to retail, the May and August credits and deferments have reduced significantly due to the tenants being able to open and return back to work from level 4 onwards. Spear's portfolio is attractively positioned to offer expansion and/or contraction space to third-party tenants due to its attractive lease terms and generally below-market asking rentals. In certain parts of the portfolio, tenants have needed to increase their premises to comply with COVID-19 social distancing requirements. In other parts of the portfolio, headwinds have emerged as knee-jerk reactions to aggressively cut overheads led to certain non-renewal of office space within the portfolio. I'm pleased to report that the space in reference has been relet at a slightly higher rental. The impact of load shedding has caused tenants to rethink their decision to work from home. Eskom CEO Andre de Ruyter announced yesterday that load shedding will remain part of the South African narrative for at least the next year, if not longer. All Spear's office locations are fitted with robust business continuity solutions in the form of backup power generators. Where do we see the risks? Asking rentals may soften as vacancies may rise higher than normal. Increased vacancies would equal to an increased competition for tenants. Generally, the potential is higher for negative rental reversions across the office sector, and the cost of installation of tenants will increase. Our industrial portfolio, making up 243,000 square meters of the total portfolio. Spear's industrial portfolio has been exceptionally resilient during the interim period, with a number of new lets and relets taking place in very challenging market. The industrial portfolio occupancy is currently at 90%. 6.5% of vacancy relates to number 1 Beacon Way redevelopment. We're in the final stages of concluding a long-term redevelopment lease agreement with a blue chip tenant, which we would advise once it's been concluded. Collections have been 93.89% versus revenue billed for the period to date. Spear has provided credits and deferments to industrial tenants to the following values: 2.5 million in credits and 1.2 million in deferments. Again, similar to the balance of the portfolio, May to August 2020, credits and deferments have reduced significantly as tenants were allowed to reopen. The vast majority of Spear's industrial tenants were allowed to operate under level 4 lockdown onwards. Again, we itemize some of the risks that we've identified. Load shedding may have a negative impact on the manufacturing tenants. Increased tensions within labour relations and trade unions may impact productivity and tenants' ability to produce their products. There may be increased capital requirements to maintain the quality of Spear's industrial portfolio, or there may be major market or tenant failures. So moving on to our hospitality assets, which makes up 28,000 square meters of GLA. This sector has undoubtedly been the hardest hit by the impact of COVID-19. To this end, early on, management had eliminated hospitality income from its FY 2021 forecasts. In FY 2022, hospitality comprised approximately 7% of group revenue. Looking at it on a per hotel basis, the DoubleTree by Hilton Cape Town generated 2.5 million rand of revenue during level 4 lockdown through repatriation services. We prepared and distributed 50,000 meals to the needy and homeless in the Woodstock, Salt River and Cape Town CBD. Since the 1st of August 2020, corporate travel accommodation and conference bookings for September 2020 onwards are being received. Post-aggressive cost cutting, hotel break-even would be achieved at 48% occupancy. We are currently about 27% away from that break-even number. Just to give you a bit of context to an operating summary, this is what we have forecasted for November 2020. We're forecasting to operate at about a 47% occupancy, December 49%, January 49%, and February 55%. The average daily rate within these forecasts is between 860 Rand to 1,050 Rand per night. We forecast to sell in excess of 11,109 rooms during that time. So moving on to 15 on Orange. 15 on Orange is a hotel that's 100% under lease to Marriott International, and I'm pleased to advise it will reopen to commence trade on the 1st of September 2020. Spear has zero exposure to any 15 on Orange property related expenses. Spear accrues rental on all hotel revenue generated on the property. Marriott remains responsible for all sales and marketing of the hotel, with numerous accommodation and conference inquiries already being received for the period from November 2020 onwards. What are the risks? The risks are that the business travel market recovers slower than expected. South African borders remain closed for international travel longer than expected. The meetings, incentives, conferencing and exhibitions market becomes reluctant to meet in larger groups. The geopolitical risk increases, safety and security concerns persist, and there's a prolonged finalisation of the COVID-19 vaccine and global rollout. What do we see as general business continuity risks across all sectors? We do see that the tenant's cost of occupancy continues to rise well ahead of inflation, that any new government restrictions that may limit tenant operations, major market or tenant failures, increased civil disobedience spilling into established business districts and operating environments in the industrial sector, and the South African borders remain closed longer than expected. So moving on to our outlook and our prospects. Spear's portfolio remains of a high quality, defensive in nature and underpinned by strong lease covenants. A hands-on approach will be maintained. All the necessary health and safety measures have been and will continue to be implemented across the portfolio. There are fewer unknowns in the year ahead as infection rates start to drop and economic activity recommences. Management anticipates that rental recovery collections will continue and will maintain at the mid to high road scenario, barring any major market failure. We will maintain our good momentum on our non-core disposals and LTV reduction strategy. Spear remains well capitalized with sufficient liquidity headroom facilities in place. Our leasing and asset management team will always remain close to the market. There have been fewer tenant failures than initially expected, but we won't become complacent. We will always stay close to our tenants. We have good quality tenants with strong balance sheets that are able to trade through these tough times. Vacancy reduction with the right type of tenant is a top priority for us. Our regional focus and proximity to our assets has been and will be our competitive advantage. Our LTV range at interim reporting period is expected to be between 43 and 46%. We do not anticipate any major valuations decline at interim period, as Spear has always been a portfolio that's been valued very fairly. So when we look at our prospects, it remains very difficult to predict fully the economic outcomes of the pandemic on the real estate sector and on Spear. Spear will not be issuing any FY21 distribution guidance until latest November 2021. Regular cash flow analysis is performed to stress test the cash flows on a rolling 12-month basis. This includes a range of scenarios of tenant collections and creditor requirements. Management's focus and energy is on rental preservation throughout this pandemic, lockdown and beyond. Our portfolio remains resilient and continues to perform within our mid to high road scenario, which makes Spear a profitable company. As a business, we will continue to be bold during these times, as we have the right vision for Spear. We want to build an iconic business in the right way with the right values and strategy within the Western Cape, as we focus on being the landlord of choice in our province. As a management team, we remain ultra committed to navigating Spear through these difficult global and local times. And I wish to assure all our shareholders and investors that we run and manage this business with a deep conviction that our strategy is sound, our board and management team has the necessary skills, and our desire to succeed has never been stronger. I thank you for your time, and God bless.